Okay, so Tesla stock did a top sign yesterday, a quite powerful one to be fair, just after a false breakout from the previous resistance. So in spite of today's reaction, which is quite good, is Tesla still poised to correct? What does it take for Tesla to resume the bullish rally again? These movements are very interesting and I will do my best to answer these questions in detail in this video. Watch it until the end. My name is Nathan and you are welcome to the Finance Hydra channel. Let's start our technical analysis on Tesla stock looking at this chart over here. In the daily chart, it is quite problematic to see Tesla in such a situation because we found a resistance level at 214 once, twice, and we are trying to correct again. This is not necessarily a bearish sign or a bearish structure, but it could create a bearish structure in the future. We're going to talk about that later, but right now, what is really important? We are going up 3% right now. This is a very good reaction. It is a decent reaction. However, is this reaction good enough to frustrate this bearish thesis over here? Well, we'll see. The problem with Tesla is that in the 1 hour chart, we were incredibly bullish since January 6th. We were just doing higher highs, higher lows, trading above the 21 EMA and most important of all, above this purple trend line over here, which is connecting all the previous bottom on Tesla since January 6th, 1, 2, 3, 4, 6, 7 times. So this was a quite important and meaningful support level on Tesla. We lost it yesterday. So what's the problem? The problem is that now Tesla has two possible resistance levels in the 1 hour chart. First one is the 21 EMA, which Tesla is trying to break right now. Still, we could see bearish reaction and see Tesla closing below it. Yes, we could, but right now we are trying to break the first resistance, which is quite good. The second resistance is this purple trend line again. Remember, according to the principle of polarity in technical analysis, previous support levels are going to work as future resistance levels and vice versa. So this purple trend line is supposed to work as a resistance level for us over here. So let's pay extra attention to this purple trend line. Right now, do we see Tesla doing lower highs, lower lows? No, it is not doing lower highs, lower lows. In fact, the previous top level on Tesla was slightly above this top level at 214 over here. So we did a higher high. We did a higher high yesterday. Now, if we see a lower low, then okay, maybe Tesla is going to reverse the bullish sentiment in the 1 hour chart for good, and this could translate into a sharper pullback in the daily chart. Right now, we don't see lower lows on Tesla yet. In the daily chart, the problem is Tesla did a very strong bearish candlestick pattern yesterday, a shooting star candlestick pattern, just after a false breakout from the 214. And this is quite problematic because a false breakout is never good, okay? It will always give the impression that the bears are here, there are sellers in the area, and this is not that encouraging for the bulls. So since Tesla already started losing momentum in the 1 hour chart, in the daily chart, seeing Tesla accumulating, doing sideways movements, doing erratic movements in this area would not be a big surprise at all. Oh, Nathan, so you see a top sign, right? And right now we are reacting, maybe we're gonna find a resistance level at this purple trend line again, or maybe even at the 21 EMA in the 1 hour chart, maybe. But do you see any crystal clear bearish reversal structure in the daily chart? Well, that's not the case. I don't see any bearish reversal structure in the daily chart. Only a possible bearish reversal structure, which is again a possible double top chart pattern. This double top was not triggered yet. As I already told you guys yesterday, in order for Tesla to actually trigger this double top chart pattern, we gotta actually lose the previous support level over here. We gotta lose the 186, 187 area, which by the way, is a quite important support level, not only because it was the previous bottom level on Tesla, but because it is quite close to the 21 EMA in the daily chart and quite close to this red line over here at 182.50, which was a previous resistance level on Tesla from on December 9 over here last year. So this entire area, over here, let me highlight it for you guys. This entire area is a quite strong and meaningful support level for Tesla. So in my humble opinion, since the bias is still clearly bullish, we don't see any crystal clear bearish reversal structure triggered on Tesla. In my humble opinion, if Tesla corrects to this support area and does any meaningful bullish reaction, in my humble opinion as a retail trader, it would be just another opportunity to buy it. Because the bias is still bullish, we don't see bearish reversal structures, and the risk reward ratio would be quite good. Oh Nathan, but is Tesla a good buy right now? Well, not a complete buy, I'm so sorry, not a total buy, maybe a partial buy, maybe because it is doing a good bullish reaction over here. It is trying to frustrate, but it didn't frustrate the bearish, the weakness that Tesla has been giving us in the 1-hour chart completely yet. In order for Tesla actually resume the bullish rally and seek the 237, we gotta break 214 for good. We gotta do an actual breakout of the 214. We did a nice attempt of breaking the 214 this week, but it was not good enough. It was not a real breakout over here. Yesterday it did a shooting star after a false breakout, so that's quite annoying, that's quite frustrating. But if Tesla breaks the 214 again, then that's alright, that's great. I believe Tesla is going to resume the bullish bias again. Right now, honestly, I am a little bit skeptical on anything that Tesla does at this moment. In order for Tesla to actually materialize a bullish rally again, we gotta break 214. In order to reverse the bull trend, we gotta trigger a possible this double top chart pattern over here, losing this entire support level, which wouldn't be that easy for Tesla. So right now, it feels like Tesla is again in a no man's land. As long as it stays inside this area between this resistance at 214 and between this support level over here, Tesla is not gonna do anything meaningful again. Now let's take a look at options, because options are quite wild right now. Oh, and since we are here, check my website, the link is in the description of this video. Join the top 5% of traders that can actually make money while beating this market. Public track record, my dear friends, public track record. Now, regarding options, we see, no, this is not right, expiring next week. Okay, options expiring next week. The maximum pain for next Friday is 192. We are still above the maximum pains price. The put call ratio is 0.77 over here. This is quite optimistic. In fact, this is surprisingly optimistic. If I were to bet, I would say that Tesla would be more pessimistic right now, but the put call ratio indicates that investors are not that pessimistic. Although we see a huge spike on puts around $200, indicating that they are trying to protect themselves. Mostly, it feels like we are more optimistic at this point. In fact, we see a huge spike on open interest on calls with a strike around 210. So it feels like investors are still optimistic, and if Tesla starts its rally breaking the 214, it is going to confirm this thesis over here, or maybe this thesis is going to confirm our own reading, because in order for Tesla to materialize a bullish rally, it gotta break the 214 chart wise. Options wise, we see the 210 as a very important spike over here on open interest, and the 220 over here as the second highest spike. So the area between these key points is around 214. So either way, it feels like charts and options are speaking the same language right now at this moment. So We gotta see a crystal clear breakout from this resistance area over here in order to materialize another bull run that could make us retest the 237. In the weekly chart, I told you guys yesterday that we would analyze the weekly chart. Well, last week Tesla did a shooting star candlestick pattern just after a false breakout from the 50% Fibonacci's retracement. This is not good. This week we are trying to reject this pattern, but we didn't reject it completely yet. Either way, in order to reject this bearish thesis, we gotta break 214, which is last week's high, and it is quite close to the 50% Fibonacci's retracement, which is around 210. So see, this area over here is a very important and meaningful resistance area for us on Tesla. Between the 210 and the 220, we see a huge resistance wall, or ceiling if you prefer, over here in this area. So yes, we gotta wait for a crystal clear breakout. And if you're still watching this random Brazilian guy talking about Tesla, come on, you probably liked the content, so why not subscribe? Click on the like button, keep updated on my data analysis here in this channel. I really appreciate your support, my dear friends. Stay safe. See you guys next week. Bye bye.